We at NMSDC recognize that educating and developing MBEs is critical to preparing the network of minority business owners for capital access and long-term business success. We want to help those seeking access to narrow down the stages of investment, forms of capital, and requirements for funding. Brought to you by the generous donation from UPS, this Access to Capital series will offer tips and insights directly from investors seeking minority-owned ventures.
Hello, and welcome to NMSDC's Access to Capital series. This is a continuation of a conversation that we held in Austin, Texas in 2018. In that discussion, we spoke to various capital providers to really understand the differences between their funds and what they are looking for in the market. Today, I have an incredible friend and great mentor of mine, Mr. Donray Vaughn. Donray is the founder of Castleberry and Company. Castleberry is an investment platform that syndicates deals to family offices and high net worth individuals. Yes, Donray. So I have to tell you, it's really unique, the family office component. So I'm very interested to dig into that and what that means. Okay. So it's my understanding that you actually manage several different variations of capital, whether it's debt financing, private equity, or venture. What I would love to open up with is really tell us a little bit more about Castleberry, about those funds, and what you're looking for.
Well, first, thank you for having me, and thank you for doing this work. It's much needed in the community. Well, let me talk to the viewers about the different types of capital.
Yes.
Okay? So some entrepreneurs don't understand what a family office is.
Right.
So a family office is when the family has made so much money in another sector that they're trying to diversify their capital and have someone invest that money or manage that money on a full-time basis. So I do not manage a family office. I syndicate deals directly to family office. So I function as a bridge, basically knowing what the family is looking for, knowing what limits, what sectors, what size, what experience, what payouts they intend to. So it really functions as a matching service. So it's also helpful, I think, for entrepreneurs in the diversity sector to understand the different asks of capital. Yeah. So a venture capitalist could be the person who writes you your first $100,000 check, but they also are hoping that you sell that business in 7 to 10 years. A private equity person would hope that the business is further along and that they intend to write larger checks. So private equity is probably somewhere between $3 to $10 to $25 million and up. And by the time you're in the private equity sector, you know that you're there, because people don't want to talk about small checks, and they expect for the business to have an existing and continuous revenue stream.
And positive cash flow.
Positive cash flow. Well, sometimes, Uber wasn't positive in cash flow for quite some time. Amazon lost money for almost a decade, but the back-end promise was so large.
Got it.
Yes. So if you have a big enough business, if you have a big enough outcome, then investors will ride with you in what they call the J curve. That's when the business is losing money, and eventually you start to make more money than you're spending. So we've covered angel. Is a cousin to venture. So those are your early investors, and people should understand if you're looking for angel investors or venture capital, you should try to talk about both size, use of funds, and how the investors are going to get money back. So a lot of minority-owned businesses are what we call legacy businesses. They're businesses that the owners and operators intend to hand down to their kids.
Yes.
So those may not be the exact type of capital that you want venture capitalists in. You may be looking for family office and or long-term investors. Or another subject that we haven't covered, which is debt. So debt, the term I like to use for debt is credit, because it sounds a lot better.
Yeah, I like it.
So we want to help small businesses understand how debt/credit can help them grow their businesses while maintaining more control and more equity in the business. So that's kind of what we do at Castleberry. We try to understand the needs of the business, understand the needs of the capital, and bring them to the middle where there can be a transaction, because the capital is pretty fixed in its ways, and the entrepreneur is sometimes not knowledgeable.
Right.
So we have to bridge that gap, and we hope to do it more and more.
Right, right. Thank you. Very much thank you for breaking out the various capital. What is unique with you is that I'm noticing you actually do play in those different stages of capital. Whenever you work with family offices and high net worth individuals, do you find that there are specific industries that they're leaning towards? And if so, what are those industries?
Yes. Well, that's a great question. So what I've found is that people stick to how they made their money. So if someone made their money in transportation, then you probably could take them an app that that stabilized or added some sort of efficiency to something on the transportation side. Or you could say, you've now retired and sold your transportation company. I want to be you 20 years ago. So here, help me, and I'll go do all the grunt work that you no longer want to do. So I'd say, before you meet an investor or before you go in front of an investor network, understand how they made their money, because it's tough to ask a transportation family to do food. It's tough to ask a technology company to do construction. So what you really want to do, and that's not always the instance. I'm right now talking to a multi-billion-dollar food family, made their money in food, about real estate. But everybody wants to be in real estate as a secure asset. But as from the entrepreneur's stake, I'd say always research how the wealth event, is what they call it in the family office space, how the wealth event happened. And the wealth event will let you know pretty much, or sometimes the website. People have taken meetings with me and not even read the website. And the website says size of deals, sector of deals, and that you don't want to walk in unprepared. So I'd say do as much research as you can, do as much research as you can on the advisory board. So let's just say I would like to talk to you about money, but you don't do transportation, or you don't do medical assistance or those type of things, or senior care or nursing or transportation, but someone on your board has that background. So it shows that I've done my research when I come in and I say, I know that that's not something that you invest in, but how about we go to a trusted board member, and if we can get them on board, then maybe they can get you comfortable with coming on board. And it really shows that you've done the research to connect the dots, because building a business is a series of problem solving. And if you can't solve the problem of engaging the conversation about capital, the chances are that you can't build this business. And we want to overcome those obstacles as minorities and scale these fantastic businesses and ideas.
Yeah, I mean, this is some really great advice. That's the first time I've heard someone mention the advisory board, or just looking at the board and leveraging that. So I think the takeaway is really just doing your research. That applies on the contract side, which I sit on, and very much on the investment side. You've given a lot of information. We talked about the advisory board. I know for you, you've actually done some really successful deals. You've had several exits. Are there common denominators among those businesses in terms of their ability to scale and exit?
Yes, on those particular businesses, I've had 4 exits in the technology space. Oftentimes, the supplier diversity space is different than the technology space. The technology space is about scaling, it's about failing fast, it's about a wide customer base. Supplier diversity can be about mastering and assisting and becoming essential in the supply chain of 1 to 3 major corporations. So what I will say to you about tech investing, because there may be a tech investor in the midst out there watching us, is that you want to look at 30 deals to do one. And when you do that one deal, you want to be in a position where you add more than capital. So there's that capital plus what else can you add, whether that be network, advice, the network of hiring additional people for the team, executives for the company. And then when you look at the supplier diversity sector, the way I try to help minority-owned businesses is not just by capital access, but also, as I said, about knowledge of how to become essential, how to not bite off more than you can chew. because failure in this business creates a reputation
Right.
stain, and reputational stain in this business can be damaging for years to come because you become a part of a multi-billion-dollar business's supply chain. So that means that they are depending on you. They're depending on you to be on time, on budget, and deliver a quality product. So the difference between venture and supplier diversity, they vary, but venture really looks for what they call a fail fast model, which is let us know it doesn't work within the next 6 months.
Okay.
Now, supplier diversity is let us know that you can work in the next 6 months. And that means try something for $1 million, and then maybe we'll get you to $2 million, and then maybe we'll get you to $5 million, and then you have a multi-year contract where you can build a legacy business off of. So for those of us who are considering eventually being a venture capitalist, I now have the pleasure of investing $5 million on behalf of Calais Campbell, the plays for the Jacksonville Jaguars.
Very nice.
He's a professional athlete that's been 10 years in the NFL and has been smart enough to put up enough money to be a sizable, notable investor. He's writing 6-figure checks. And,
Wow.
My job in that fund is to source those deals and recommend them to his investment committee. So he's not only an athlete that's smart enough to have saved some money, he's smart enough to have an investment committee assisting him in making those decisions. So we look at tech deals. We look at also franchises because those are things that he was interested in. When it comes to the supplier diversity sector, which is where our viewers are probably the most interested in, if you're trying to attract capital, I'd say attract capital based on a proof of concept.
Right.
We have FedEx. We think we can get Grady Hospital. You know, get one, then build on another.
Right. So what I'm hearing is that in order to secure that investment, it's great to have the secured contracts in the pipeline.
Well, it's at least good to have an intent, or you get an advocate, and there may be actual supplier diversity individuals like yourself watching this video. I think a lot of times people on the inside of major corporations can help the small businesses by being advocates on their behalf.
So I describe myself and my peers as entrepreneurs. That is because we are tasked with selling the value of supplier diversity to all of our internal stakeholders. Not everyone within a large matrix organization, one, knows that supplier diversity exists, or immediately sees the value. And so by going out, connecting with stakeholders and sharing the value proposition, I'm then able to get folks on board.
Yes. And using the validation of the corporate name. I am Executive X from Corporation Y. We'd like to team with this small business and do Z.
Right.
That is a successful transaction which requires flexibility on everyone's half. If the supplier diversity sector really intends to grow its spend like it's claiming to, and I know that the NMSDC is working hard at that, but it's going to require people to step outside of their comfort zone and really to become advocates, entrepreneurs.
Entrepreneurs.
Okay, I got to get that word right. Can I borrow that?
You can.
Okay.
It's not original to
It's
me,
not original.
but
Okay.
I use it.
Okay. So I've never worked inside of a corporation, so but I it's necessary. It's necessary to be to have someone that is an advocate inside, because understand this: when you're pitching investors, very few investors, unfortunately, are minorities.
Right.
So oftentimes we're going to another subset of individuals who are concerned about making money, but they need that validation of what they call downside protection. So entrepreneurs usually think about the upside.
Right.
The biggest divide between an entrepreneur and an investor is the entrepreneur thinks about everything positive that can happen. An investor thinks about everything negative
Interesting.
that can happen. So how do you get those two people married?
Interesting.
That's what I do on a daily
never
basis,
viewed
and
that way.
maybe that's why I need a drink. No, I'm just kidding. So yes.
I mean, there's just so many takeaways from that. One thing I do want to talk about, so you're saying that you have to go out to these folks. I'm the entrepreneur. I'm advocating internally. You're advocating externally with usually non-diverse folks
Yes.
to raise the capital. Do you, with your fund, only look at minority-owned businesses, or are you also looking at majority firms that you're looking to convert?
Yes. Well, I syndicate based on the capital's need.
Okay.
So I really work on behalf of the money. As an African American, I try to make sure that I give access to that capital to minority-owned businesses.
Right.
So my personal desire is to be a more diverse investor. I have unnamed investors who simply say they're not concerned about diversity, they're concerned about making money. But as an individual, as a person, and when I have influence over a scenario, I will, one, try to make sure that Black, brown, LGBT, veteran, disabled-owned companies get a seat at the table. Two, if I can lend an extra hand, if I can be that inertia that gives them considered or helps them move or even takes a educational call. Why I say, you're going into a room, here's the cliff notes.
Yeah.
If you hit these beats, you'll be far ahead of the others. And I don't mind giving inside information to entrepreneurs of color to help them, or minority entrepreneurs to help them get ahead, because just so many other ecosystems have a support system.
Well, I think that that's really the key, and one of the value propositions of NMSDC, quite frankly, is the fact that it builds a network.
Yes.
It was through that network that you and I were introduced by way of a common friend. So I do...
Shout out to Mike.
Shout out to Mike.
Yes.
I do think there's a lot of value in having those advocates and having those advisors, and to your point, giving information that will help empower them when they go into that meeting.
Yes.
So I know you're working on something really, really big right
I
now.
am.
It is something that actually connected us in
Yes.
terms of interest and investment. Let's talk a little bit about opportunity zones.
Yes, the word
And
of the day.
The word of the day.
Yes.
So for those that are not familiar, I will let you
Yes.
speak to what it is.
So
and what it
opportunity zones are a part of the tax legislation that allow high net worth investors who are experiencing capital gains to invest those monies in underdeveloped communities.
Right.
So it's both rural communities, so think farming, think countryside, and also urban communities, so think
South Bronx.
South Bronx, parts of Atlanta, parts of
Yeah.
Crenshaw. So what's happening now is that the government and Treasury expects about $150 billion to be invested in these neighborhoods over the next 36 months.
Now, before you continue, there are no terms and conditions with these investments that require investment in minorities or minority businesses, correct?
It doesn't require investment in minority businesses. It's due to the geographic outlay, it requires investments in minority communities. So what's going to happen is we're going to be standing next to a blank plot of land 1 month, and 7 months later, there's going to be a 10-story skyscraper. Now, what I do in that sector is I try to make sure, from the supplier diversity NMSDC guided model, is one, to make sure that that building and that development had minority partners.
Right.
So they have minority partners on the construction side, they have minority partners on the engineering and electrical side. So if you're building a $100 million building, let's see if we can catch a minimum, of $40 to $50 million in minority-owned businesses. So personally, since I was interested in the sector, I was able to go back to my hometown of Atlanta. I currently live in Los Angeles, and partner with an visionary entrepreneur named Ryan Gravel, who created a project in Atlanta called the Beltline. So the Beltline is world-class. It's a 22-mile link of unused railways, and it's now generated about $8 billion in what we call related value. So the land around the Beltline is now primetime property.
Yeah.
So Ryan and I both agree that communities shouldn't be overlooked, they should be included.
Agree.
So the thesis of our fund is that we want to basically include the communities in which we are doing a development. So I have the pleasure to have the mall that I grew up in under contract.
Oh, that's amazing.
Yes, we intend to buy the West End Mall, which is across from Morehouse Spelman and Clark, and turn it into a beacon for inclusion. We want businesses to come there and focus on multicultural marketing. We want people who are serious about supplier diversity, like the NMSDC, to come and have regional offices there. It's across from the best of the best in Black education. So we want to basically do this $350 million project. And if you had told me 2 years ago that I would be in the real estate business, I'd tell you that I'd be in the technology business.
Interesting.
But through understanding that God was giving me a gift,
So what was the pivot? What was the pivotal moment? Did someone approach you?
the pivotal moment for me was that I was out pitching high net worth individuals about diversity, technology, and media. And inevitably, they'd all say to me, "Do you have anything in real estate?"
Interesting.
So some of them were still interested in technology, some of them were still interested in media, some of them were still interested in diversity. But the universal asset that all wealthy people have
Is real estate.
is real estate.
That's right.
So it took me a while because I was so enamored in diversity and technology, and I wanted to make movies and TV shows and invest in apps. That real estate just seemed like, okay, pay my mortgage, I'll be fine. But now I've gone from paying a mortgage to buying a piece of property and redeveloping it for $300 million.
Well, to your point of redeveloping it and then opening it to service the community, Atlanta is a hotbed for media and production.
Yes, it is.
And therefore, you can continue to pursue these
yes.
media technology.
It is serendipitous.
It is
planning.
extremely serendipitous.
Well, I'm going to say, I guess I've already said it on camera, but I'm going to tell people that it was on purpose. So cut that part. No,
it was on purpose. So that's actually really fascinating, and I believe you know that conference for NMSDC this year, 2019, will be in Atlanta.
Yes.
So I think that's actually a really great opportunity to showcase what you're up to.
We plan to. I'm teaming with the Chamber of Commerce and some local entrepreneurs, and I hope to convince the NMSDC to do sort of like a blended party. Sometimes you go to conferences and it's only people from the conference. I'd like to figure out a way where we can bring in Atlanta entrepreneurs that are not familiar with the NMSDC.
I think it's really interesting because you mentioned the world of supplier diversity and sort of the suppliers and vendors that our world is focused on. You've talked about the investors and what your world is focused on, and they seem to be rolling in two different lanes, unless you're in the larger space of, to your point, food and beverage, that kind of thing, transportation. Do you see a sort of overlap in the future of supply chain and these out-of-the-box sort of disruptive investments, not real estate specific, but the technology, the media, that kind of thing?
Well, what I do see is I see more urban professionals, no matter, I'll see more minorities, or let me reframe this.
Okay.
What I do see is I see more professionals bridging the gap for small and minority-owned businesses. So what I have experienced lately is I'm not the only one talking to wealthy individuals about the underbanked or the unbanked. So in the past, when I would walk in a room, it would be the first time that they'd heard that Black and brown and minority and women-owned businesses are underbanked. Now they've heard it before in the press. They've read about it. Forbes magazine. It's now covered. It's the business version of Me Too. So it's no longer a new subject to allocators. So what I can say is that even just like I heard real estate in a chorus everywhere I went, I heard about it. So now I'm in the sector. I think that that's what's happening around capital. I think banks are understanding that they need to bank small businesses. Small businesses are adding the jobs to the economy now. Family offices are trying to think about how they want to be more impactful. So one of the ways that they can be impactful is investing in small businesses through some sort of debt, foundation, or some sort of double bottom line investment. So I'd say as we stand here in 19, 5 years ago, I felt like I was giving people new information. I do not feel like that is new information anymore. I think that we are on time and in time, and get your ass together and, be prepared.
Yeah. Well, I do believe it's good now that it's becoming more of a common dialogue, particularly in that circle. From your experience, do you see that those high net worth individuals are viewing this domestic emerging market as a true opportunity, or are there still some barriers in understanding?
There's barriers in understanding, but what we need is some winners. So by the time large minority businesses, small minority businesses become large minority businesses, people are unaware of them.
Right.
So what do? Do I need to take a black enterprise into my office meetings, or do I need to take a Inc. of fastest growing small businesses? What I really do think the NMSDC and other organizations should do is celebrate the success.
Yes.
This veteran-owned business was at $300,000 in revenue in X year, and 5 years later, look where they are.
Right.
So I think what we need to do is celebrate these successes, and that will show the market that there are others out there.
I agree with you. So it's very interesting you say that. I think that's why you and I, we just completely are on the same page. I participated in this Aspen Institute Latinos in Society program. And one of the main topics that we continued to discuss was the narrative. Not having enough positive stories shown on a national scale around the success of, in this instance, it was Latino-owned businesses, but it also applies to African-American and other minority-owned businesses. So I think that you make an excellent point, and we need to amplify that. And the hope is that through series like this and through other conversations that we can actually start to get that messaging out.
Yes. So it would be helpful if we can get corporations to validate that small businesses have grown to become more important in their supply chain, and therefore receiving more revenue and receiving more of a slice of the business, like Comcast, like UPS, like Wells Fargo, coming into the cycle and saying, we'd like to show you that we started this business here, this business outperformed our expectations, and now they're here. And what will happen is investors out there in the network will see that small business next to UPS, and they will say, why aren't we in business with that small business? So we need to really celebrate the wins and celebrate the wins attached to their corporate partners.
Right.
So a good thing for a large corporation to do is say, I'd like to thank these 20 vendors who have been small, growing, and haven't disappointed us. And then a part of your business strategy is, I'm one of 20. I'm one of the 20 vendors that have been essential. So what I'm reverse engineering and framing here is, corporate validation means a lot in finance.
I will underscore that. So I've had the pleasure of running alongside some of my peers at NBC Universal an accelerator program.
Yes.
And while the accelerator program's intent is to give these companies access not only to contracts at Comcast, NBC Universal, but also to capital through network providers like Donray and others. And what we're finding is, where it's not sticking immediately with the investors that we've invited to those conversations, the validation of participating in a corporate program
Absolutely.
has been instrumental in getting some of our folks investment. We had one Latino-owned firm who just secured a sizable investment, and it was directly correlated to her connection to our company.
So if we want to grow the supplier diversity sector, the NMSDC as an organization continue on its path, it's really going to be up to the corporate partners to validate the market to the capital providers.
Got it. So not only do the entrepreneurs have their to-dos, professionals on my side also have our to-dos as we partner. Donray, this has been an incredible conversation. I do want to give folks an opportunity to connect with you directly. So where can we find you, and where should those businesses go to learn more?
I think you can, the best way to find me is go to my website, which is my name, donrayvon.com. And we'll put it right here. Shout out to Digital Bodega.
Yes.
Shout out to Angela. She's a fantastic advocate on behalf of diversity and inclusion. And thank you for your hard work and being so persistent. And she's so persistent that I flew to New York for 3 hours to be on camera.
I also think that speaks to your dedication
Yes.
to what we're trying to achieve.
Yes.
So,
Well, what's possible,
thank
what's
you to
needed.
you. Yes.
You know, the world is, America is moving toward a majority minority
Right.
position in the coming years, but the minority part of the population is underbanked.
Absolutely.
So we're going to have a surplus of people with a inefficient capital access. So it's a real problem. It's a generational problem. It's one of the biggest problems that we face, that we're increasing in population and we're staying at a subset of our slice of the pie.
That's right. That's right.
So I'm here to solve that problem because it could be one of the biggest things in the future.
It absolutely could be. Absolutely. And as a mother of 2 Latino boys, I am taking notice
Yes.
of that. So we will certainly put the information at the screen. Anything else that you want to share with our audience?
I'd say do good works and scale together. A lot of people are out there trying to build a one-man, two-man business. Call your neighbor, call your competitor, team up, and you guys could probably build a business 3 times as large.
That's right. I mean, that is really sound advice that doesn't just stick on the investment side. It also applies to the corporate side. I've often heard folks will fight over a peanut. For one peanut when you could have half of a watermelon. So really teaming up to get the bigger deals is the way to go, and the way that we're going to make impact and those stories and narratives that we can share. So thank you.
Thank you.
So much for your time and for flying in from Atlanta to be here. Donray is on a flight to LA straight from here. So we appreciate you.
Thank you.
you so much.
Thank you.
Be sure to subscribe to the YouTube channel if you want to learn more and follow this series.